That was 1 month ago in Luxembourg at the finance ministers meeting. And the November finance ministers meeting is actually taking place today, just around the corner here. We were going to have the Estonian and Latvian finance minister here this morning at 9:30, but the Swedish presidency decided to let the meeting start at 9 o'clock with the breakfast, so not at the regular time of 10 o'clock. And that meant that none of the finance ministers actually was able to join us over here. It would have been good to actually pay some attention also to the eastern countries in Europe. We heard a lot from Iceland yesterday. We've talked a bit about Ireland. But the drama that is really playing out in Latvia and Estonia, where GDP rates are simply crashing down 20–25%, where people bought euro-denominated mortgages in the 1990s and in the last few years, and where the local currencies have completely collapsed against the euro. There's severe financial problems over there. And I think that is what we also saw in some of the discussions on the LinkedIn platform ahead of this conference. Some of the areas that have not been covered at all in Europe. And I'm tempted actually to go there and spend a week and see if we can get the money together to do some reporting on how the financial crisis is panning out in those countries. Because I think from a European perspective, there has not been enough attention of what's been happening over there. Now, I thought yesterday was a really, really good day. I'm not sure if we can draw any fixed conclusions yet on what we heard. We heard a lot of different arguments. What struck me, though, and also in evaluating it in some talks last night at the Claridge, what struck me was that we talk about the media and journalism as if they are one thing. And I think if there's one thing we should focus on in the debate is that there's a big difference between the media, the big corporations, the organizations that have the influence, the newspaper organizations who are basically looking to make a profit. And of course you need to make a profit, otherwise you don't have a solid future. But also journalism and journalism. I think that is, it belongs together, but it's not the same thing. And I think it's one thing to talk about the responsibility of the media, but you also have the responsibility of the individual journalist. And I think, based on my experience, the individual responsibility of the journalist is maybe even more important than it is of the media organizations. And I think that responsibility of the journalist actually is what we're talking about at this conference. With that, I want to give it back to Edna for today's session. Edna, we also have a lottery this afternoon. Maybe you want to say
yes,
something
I
about
do
that.
want to collect maybe your business cards. I suppose it's the easiest way to do it. Or we could have a quiz or something outrageous like that. But we have some wonderful drawings outside, which I think it would be nice if Raymond has said that many of you can take. The big board game has to stay at head office. They need that. But we have some wonderful drawings, so we've got quite a few of them. So before we go, we can maybe pull a little lottery, and you can take home one of the wonderful Cal drawings. You can even color them in. They're great fun. So you can, it can be a little interactive because they are all black and white. So there you are. It's the double whammy. You'll have good fun with it. Let's get this morning started. We have a wonderful rundown. What we're going to do is have 3 presentations. They will be individually presented, and then I'll bring back the 3 speakers on the stage, and then we'll have a more interactive discussion with them. So again, on day 2 of covering the crisis, we're going to look at our first presentation, will be called The Story Not Reported. So we heard a little bit from our speaker yesterday talking about this in terms of what's known, what's unknown, and what might never be known. But he will indeed go into great detail on that. And he's a respected economist. He's also a writer. He's speaker. We've seen him a lot. He's a bit of an expert on the economy, energy. He's appeared on CNBC, on BBC, has been interviewed with all the major publications. And he's formerly worked with Wachovia Bank and did his stint at McKinsey, as they all ought to do, I suppose. But since then, he has moved now into running his own business. So please welcome, he's the president of Prestige Economics from Austin, Texas, Jason Schenker. Go.
Thank you very much, Edna. When Raymond came to me and said he wanted me to talk today, I thought something interesting would be the stories that I had never seen. You know, there are a number of different things that have been missed in the financial crisis, and there's a number of different reasons for this. You know, there are some inherent knowledge blocks when we think about how reporting in the financial sector is different than in other spaces. And there are a lot of challenges and differences with how financial journalism functions. And there are also some implications of how to handle these things in the future and what journalism can do better in order to address financial crises moving forward. You know, I'm going to tell you a number of different stories. And you know, the first thing I want to talk about really is when, the question everybody wants to know, which is, when did you know what was going on? I worked on a trading floor. I was in an investment bank. And as an economist, I had the privilege of being sort of placed in the Swiss cheese between the Chinese wall. And, you know, on the one side, there are investment bankers, and they can't talk to the analysts. And economists can talk to both. So you become a conduit of information. You can't discuss any deals or anything non-public. But if an investment banker in a deal wants to know how the economy looks or the industry you cover, how you feel about it, that's fine. And if an analyst wants to talk to you about how the economy looks and how you feel about their sector, that's fine too. You also end up talking to people on different desks. So in August of 2007, things were really bad. They were really, really bad. People still do not fully understand what happened when the Fed and the ECB started injecting hundreds of billions into the economies. You know, what basically happened was you had a portfolio manager, a loan portfolio manager at BNP Paribas, flag some different mortgage securitized structured products and question their value and their rating. And the result was it sent everyone into a tizzy. It's unbelievable to think that a flag from a portfolio manager about an individual product's rating could do this. But within a series of days, really, you had hedge funds going to cash. People didn't really know what was going on. But for those of you, the story I like to tell is the one from, there's a Christmas movie that's quite popular in America called It's a Wonderful Life. And it's all focused around basically a savings and loan. And there's at one point a rush on the savings and loan. Everyone wants their money back. And in order to give everyone their money, you know, it's very difficult. In order to stay solvent at the end of the day, you know, they had to have still $1 when they closed at the end of business. And they had $2, and they were very happy about this because they stayed in business. And at the end of August 2007, we still had money floating around, and we were still in business. But we had suffered a massive run on the banks. And it wasn't a run, I want my money out. It was, I want to get my money out of these securitized products into cash, and I want it to happen now. My phone was ringing from people on the equity desk, from people that were in debt, traders, anything, you name it, inside, outside the bank, central bankers, and people were saying, you know, what's going on over there? What are you seeing? Because we're seeing everyone, all the smart money, all the fast money, is dumping everything and going to cash. So it wasn't good at all. And yet, so August of 2007 comes and goes. The injections stop. We put this weird phenomenon away in a drawer, close the drawer. The stock market goes up and up and up, and everybody forgets about it. You know, this is like being rushed to the hospital with chest pains and then not thinking you need